Now, let's talk money. Congratulations on making the move to Canada. You've embarked on a thrilling adventure, filled with new experiences and opportunities. As you settle into your new home, one crucial aspect of Canadian life to understand is credit. It's the backbone of your financial well-being, opening doors to everything from renting an apartment to securing a loan. Think of it as your financial passport, demonstrating your trustworthiness to lenders. In Canada, your credit history speaks volumes. It tells lenders how responsibly you manage your finances. A good credit score is your golden ticket to accessing financial products and services easily and affordably. Without a credit history, it can feel like you're starting from scratch. But don't worry, we'll guide you through the process of building a solid credit history step by step. Remember, building good credit takes time and effort, but the rewards are well worth it. With a little patience and the right approach, you'll be well on your way to financial success in Canada. So, let's dive in and demystify the world of credit. Imagine a report card, but instead of grades, it shows how well you manage borrowed money. That's your credit report. It's a record of your loans, credit cards, and bill payments. Lenders use this report to assess your credit worthiness, your ability to repay borrowed money responsibly. Your credit score is a 3-digit number, typically ranging from 300 to 900, that summarizes your credit report. The higher the score, the better your credit worthiness. A good credit score in Canada is typically considered to be 660 or above. This score is crucial because lenders use it to determine whether to approve you for loans, credit cards, and even rental apartments. Your credit score is influenced by several factors, including your payment history, how much debt you have, the length of your credit history, and the types of credit you use. It's like a puzzle, where each piece contributes to the overall picture. Understanding your credit score and report is essential. It empowers you to manage your finances effectively and access better financial opportunities. Now that you know what's at stake, let's explore the steps you can take to build a strong credit history in Canada. Building credit as a newcomer might seem daunting, but it doesn't have to be. The key is to start small and take consistent steps. Here's how to begin. First, open a Canadian bank account. This is your first step. It allows you to manage your money, receive payments, and start building a banking history in Canada. Choose a bank that suits your needs and offers services that cater to newcomers. Next, get a social insurance number, or SIN. Your SIN is essential for working in Canada and accessing government programs. You'll need it to apply for credit as well. Then build a positive payment history. Even if you don't have credit yet, you can demonstrate responsible financial behavior. Pay your rent and utility bills on time, every time. This shows potential lenders that you're reliable and can manage your finances effectively. These foundational steps lay the groundwork for building credit. By establishing yourself financially, you'll be in a much stronger position to apply for credit and start building your credit history. Secured credit cards are an excellent option for newcomers to Canada. Unlike traditional credit cards, secured cards require a security deposit, which acts as collateral for the lender. This deposit minimizes the lender's risk, making it easier for you to get approved. Here's how secured cards work. You deposit a certain amount of money, typically a few $100s, with the credit card issuer. This deposit becomes your credit limit. You use the card like a regular credit card, making purchases and paying your balance monthly. The beauty of secured cards is that they report your payment activity to the credit bureaus, just like unsecured cards. By using the card responsibly and making on-time payments, you demonstrate good credit behavior and gradually build your credit score. Over time, as your credit improves, you may be eligible to upgrade to an unsecured credit card and get your security deposit back. Section 5. Credit Builder Loans. Borrow to build. Credit Builder loans are another valuable tool for building credit. These loans are specifically designed for individuals with limited or no credit history. Here's how they work. You borrow a small amount of money, typically a few $100 to a few $1,000, from a lender. Instead of receiving the loan funds upfront, the lender deposits the money into a locked savings account. You then make regular payments on the loan, with interest, over a set term, usually 6 to 24 months. The lender reports your payments to the credit bureaus, helping you establish a positive credit history. Once you've repaid the loan in full, you get access to the funds in the savings account, plus any interest earned. Credit builder loans offer a structured way to build credit while also saving money. By demonstrating your ability to make consistent on-time payments, you prove your creditworthiness to future lenders. Section 6. Becoming an authorized user, shared responsibility. Becoming an authorized user on someone else's credit card is another way to build credit. As an authorized user, you'll receive a credit card linked to the primary cardholder's account. Your name will appear on the card and you can use it for purchases. However, you're not legally responsible for repaying the debt. The primary cardholder is ultimately responsible for making payments on the account. But here's the catch. The account's credit history, including your payment activity, is reported to the credit bureaus under your name. This option requires finding someone trustworthy, like a close friend or family member, willing to add you as an authorized user. It's crucial to have open communication with the primary cardholder about spending limits and payment responsibilities to ensure a positive impact on your credit score. Section 7. The rent advantage, reporting your payments. Did you know that paying your rent on time can also contribute to building your credit history? While landlords don't typically report rent payments to credit bureaus, you can take advantage of rent reporting services. These services act as intermediaries between you, your landlord, and the credit bureaus. They collect your rent payment information and report it to one or more credit bureaus on your behalf. This helps you establish a positive payment history, which can boost your credit score over time. Several rent reporting services are available in Canada. Some require a small monthly fee, while others partner with property management companies or financial institutions. Research different options and choose one that aligns with your needs and budget. Section 8. Bills, 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 pay them on time, every time. This might seem obvious, but it's crucial. Always pay your bills on time. This includes everything from your credit card bills and utility bills to your phone and internet bills. Late payments can significantly damage your credit score, making it harder to get approved for loans or credit cards in the future. Set up automatic payments or reminders to ensure you never miss a due date. Create a budget to track your income and expenses, ensuring you have enough funds to cover your bills each month. Remember, even small bills count when it comes to building credit. By demonstrating a consistent pattern of timely payments, you establish a solid foundation for a healthy financial future. Section 9. Credit utilization. Keep it low and watch it grow. Credit utilization refers to the amount of credit you're using compared to your total available credit. It's a significant factor in determining your credit score. Lenders like to see that you can manage credit responsibly without maxing out your cards. A general rule of thumb is to keep your credit utilization below 30%. For example, if you have a credit card with a $1,000 limit, try to keep your balance below $300. High credit utilization can signal to lenders that you're relying too heavily on credit, potentially putting you at risk of overspending. To improve your credit utilization, you can either increase your credit limit or reduce your balances. If you've been using your credit responsibly, you can request a credit limit increase from your credit card issuer. Section 10. Monitoring your credit. Stay informed. Regularly monitoring your credit reports and scores is essential for maintaining good financial health. It allows you to catch any errors or discrepancies that could negatively impact your credit worthiness. You're entitled to receive one free credit report from each of Canada's 2 main credit bureaus, Equifax and TransUnion, every year. You can request your free credit reports online, by mail, or by phone. Review your reports carefully, looking for any inaccuracies or suspicious activity. If you find any errors, dispute them with the credit bureau immediately. In addition to your free annual credit reports, consider using a credit monitoring service. These services provide regular updates on your credit score and alert you to any changes in your credit report. Section 11. You've got this. Embrace your financial future. Building credit in a new country can feel overwhelming, but remember, you're not alone. Millions of newcomers have successfully navigated this journey before you. By following these practical tips and staying patient, you can establish a solid credit history and set yourself up for financial success in Canada. Embrace the process, stay informed, And don't be afraid to ask for help when you need it. Many resources are available to support newcomers, including financial literacy programs and credit counseling services. Remember, building good credit is a marathon, not a sprint. Every step you take, no matter how small, brings you closer to your financial goals. So go out there and build the credit history you deserve.